Welcome to the latest Business Finance Bulletin, episode 99. Welcome again to this week's Business Finance Bulletin with me, Rob Warlow from Business Loan Services. And yes, here we are at episode 99, just one away from the magic 100. In this week's episode, I'm looking at the Entrepreneurs Index report carried out by Barclays Bank and the Regional Growth Fund, looking at high growth companies, equity crowdfunding, how successful has it been? The funding gap from alternative finance, also a look there at what businesses are missing out on by not being aware of the alternative sources of finance. A new service being launched by Just Cashflow as an alternative to overdraft facilities. And in my business finance tip of the week, invest, don't spend. Let's start this week's bulletin by looking at the latest Entrepreneurs Index report as carried out by Barclays Bank and the Regional Growth Fund. Now, this report is in its 7th edition and is a really great snapshot of what's going on in the UK business world. And this report has a particular look at high growth companies. So what's the report reveal? Well, first, some really good news. The number of limited companies as registered at Companies House continues to grow and in fact is at an all-time high since this report has started. As of June 2015, there were 3,261,000 businesses registered as limited companies at Companies House. And that was a 3.86% increase on the previous year. So some good news there. That's further augmented by the fact that the number of dissolutions or companies closing down has also fallen. Now, from June 2014 to December 2014, the number of dissolutions was about 193,000. Well, from December 2014 to June 2015, that was down to about 170,000 businesses. So still a large number closing, but a significant reduction on the previous period, which again is good news. Now, what about high growth companies? Well, first of all, what is a high growth company? Well, as defined in the report, a high growth company is a business turning over anything from £2.5 million up to £100 million a year. They've also got to have a 33% increase in turnover over a 3-year period and a 10% increase in sales over a 2-year period. So how are these businesses doing? Well, some good news and bad news in a way. First of all, the number of high growth businesses as a proportion of the overall business economy has fallen slightly, down from 21.5% to 20.8%. Now you may think, well, that's bad news. Well, it is in a way, because obviously high growth companies really contribute in terms of employment and tax revenue, etc. But what it does mean, of course, that there's a higher number of medium and smaller enterprises beginning to grow as well. And that can only be good news for everybody. So where are the high growth hotspots? Well, taking number 1 spot is the Southwest, and they're leading with the largest proportion of high growth companies. And in second place, I'm glad to say, being Welsh, it is Welsh-based companies are leading with the second position there as well. So great to see there's not just the Southeast, but it's other parts of the UK economy which are also highly performing as well. Let's turn now to crowdfunding. Now, many businesses are raising equity via selling shares through crowdfunding platforms. But the key question is, how successful have those businesses been following the raise? Well, this is a question asked by Altfi, which is an alternative finance analysis company. And they asked this question in the report it just released called Where Are They Now? So what they've done, they've taken from 2011, which is kind of recognized when crowdfunding for equity really got going. And they had to look at 5 key platforms and the businesses which raised money from them. Those platforms, Crowdcube, Seeders, Syndicate Room, Venture Founders, and Crowdbank. So they found that there were 367 businesses that had raised money. Now, the key finding is 80% of those businesses today are still trading. One of them has successfully exited, and the others are kind of showing signs of distress or have already closed down. But an 80% success rate, that can only be good news. Now, of course, equity takes quite a while in order to work its way out to show its true potential. So it's still very early days, but from 2011 to 2015, that's a big enough gap to be able to start looking at the data. Now, what are the benefits generally? Well, one thing that the report found, that of those businesses that raised equity through the crowdfunding platforms, 25% of them have reported that they have increased their headcount, taken on more employees. Of those that did increase their headcount, the average increase was about 83% more people employed. And obviously that's good news for everyone. Now, one little myth that comes around crowdfunding and selling equity is that many people think it's for startups. Well, the report found out that the average age of the businesses going for equity through crowdfunding is just under 3 years old. So it's for businesses that are really now getting to start and get some real traction going. So, interesting report there, and I'm sure that's now going to become an annual report from Altfi. So if you want to know more about crowdfunding and equity in particular, how it can work, please just drop us a line, info@businessloanservices.co.uk, and we'd be happy to point you in the right direction. Sticking with alternative finance, a report came across my desk this week carried out by GLI Finance and Cambridge University Centre for Alternative Finance. They were looking at the awareness generally of alternative finance. And the first thing they've come up with in this latest report is that they estimate that by 2020, unless small businesses go looking for alternative sources of finance outside of the main high street banks, there's going to be a £20 billion funding gap. They reckon that about 80% of business lending is still done through high street banks, but more importantly, 56% of SMEs are not really aware of the different sources of alternative finance. Now, as we know, I'm a great advocate of alternative finance, partnered up with traditional bank debt. We can see great examples of both high street banks and the new crowdfunding platforms and all the other alternative forms of finance sitting side by side. So the message from this report is really for the government. They want the government to start really powering up there and raising awareness amongst businesses of all the different alternative sources of finance that are out there. But of course, one thing you can do is to continue watching and listening to this bulletin and podcast, because I'll always be bringing you all the latest news about the new products and services that catch my eye on the alternative finance scene. Are you one of the many businesses sitting there watching this bulletin or listening to this podcast who's suffering from a cash flow problem? Well, if you are, you're not alone. There's many of you. Well, a new solution caught my eye this week. A new service just launched by Just Cashflow. Just Cashflow, a cash flow solutions provider, and they market themselves as an alternative to bank overdrafts. Flexible access to flexible funding. Now, their new product is called the BusinessPlus Mastercard. Yep, you can get a card now. So how does it work? Well, it links in with a revolving credit facility. So how it works is you draw down money on the revolving credit facility and load it on up to your Mastercard to a maximum of £10,000. So you've got a card that is preloaded with money. You then use that card as you would do normally. Pay for goods online, go to an ATM, pay for retailers over the counter, whatever it may be. It just gives you a lot more flexibility. So what's the cost? Well, when you draw down under the revolving credit facility, the interest is charged on a daily basis at 0.075%, and you only pay for what you use. It's then flexible. You can pay it off as and when you want, or draw new money down and load it back onto your card. So a great service there, a lot more flexibility there in how you can access funds immediately, and flexibility as when you can pay it back. So if you want to know more about that, just go along to the Just Cashflow website, which is just-cashflow.com. Moving on now to my business finance tip of the week, and here's a phrase for you. It's invest, don't spend. Now, what do I mean by that? Now, we've all got expenditure, obviously, the day-to-day costs of running business generally. But sometimes we do make these bigger impulse purchases. Sometimes, we chase that shiny object that catches our eye on a website or in a shop. But before you actually get your pen out and sign that check or hand your card over, I just want you to stop and think. Is this an expenditure, a spend, or is it an investment? And it's really got to be an investment. These bigger purchases have to pay off for you in the medium to long term. So before you go out and spend your precious cash, just stop and pause and just think, is this thing I'm about to buy going to give me a medium to long term benefit within my business? If it's not, it's just an ordinary spend and you may not get the value back that you think. So pause and stop and just think. Invest, don't spend. That's it for this week, so I hope you enjoyed this bulletin, and please, as ever, if you did enjoy it, please feel free to share it amongst your friends and colleagues. And don't forget, we've got the podcast version as well on our SoundCloud and iTunes page. All you have to do is search for Business Finance Bulletin. That's it for this week. Look forward to being with you in the next episode, which is episode 100. Until then, have a great, successful and profitable week. Bye-bye now.